This is Scott Becker with the Becker Private Equity and Business Podcast. Today's discussion is play to your own risk tolerance. So in investing, everybody has a different risk tolerance that they could live with. Of course, when the markets are going up, we all wish we had a higher risk tolerance so we could really enjoy the ballast of the markets going up. In business, the same thing. If we have a higher risk tolerance, we're willing to hire more people, try and generate more sales, try and build a bigger business. So the contrast on both of these is, depending on your risk tolerance, when things go poorly in the market, you could either hold the line and retain your equity percentage ownership, or you could get sucked into having to sell down on it because you really don't have the risk tolerance to play at that level. Similarly, in business, if you have the big risk tolerance and you end up hiring a big sales force, start putting lots of money into whatever effort you're putting into, you sometimes have to maintain that risk tolerance to be able to see it through, particularly if at some point it looks like sales won't keep up with projections where you expect it to go. So risk tolerance is critical in investing in business and quite frankly in sports. I mean, so many of us can either play a big game where we take lots of risks, but then we need the mental fortitude to recover from taking those risks, or we end up in a spot where once we take those risks and it goes sideways, we could end up being a very difficult, challenging player to play, to be, because we've now lost our sort of comfort zone by trying to go big. The flip side is, if you try and play too careful, whether in investing, in business, and sports, the real problem you have is there's a low ceiling on how well you can do. So this concept of sort of playing to your own risk tolerance, investing to your own risk tolerance, engaging in business, your own risk tolerance is so important. And it's knowing your risk tolerance and knowing yourself, and then figuring out whether you could take measured steps to take more risks in different things to perform better or to get better results. And this is a complicated balance, because many of us find we, on average, play our best game in the markets and in business, play our best games in whatever sports we play by playing within our lane and playing relatively carefully versus trying to play big. The flip side is, again, very limiting. There's only so far you can go by playing within your game, by playing within your limits. You could become a very solid business person, investor, golfer, tennis player, whatever it is that you do by playing within your limits and playing to your strengths. The flip side is sort of recognizing, how do you push beyond those limits a little bit to play for a little bit higher ceiling periodically? That's kind of the great question that we struggle with. I'd love people's thoughts on this. Again, 773-766-5322. Do you limit yourself too much by playing to your risk tolerance? Or are there some places in life where you should do that and some places in life that you shouldn't? Thank you for listening to the Becker Private Equity and Business Podcast. Thank you very much.